Muthoni, you are the moderator of this great panel, which is centered around the regulatory landscape of blockchain and digital assets. I look forward to a great panel discussion.
Thank you so much, John. Thank you. We're going to be talking about the regulation space within the digital asset. And I would say, gentlemen, that the genie is completely out of the bottle for the crypto and digital space. What is the regulatory stance in terms of regulation in the US? We could start off with you, David.
Regulation in the U.S. is a bit all over the place. The regulators haven't been 100% clear. It's been a bit confusing at times. I think we'll talk about what's going on with Ripple and the SEC a little bit later. The hope in the U.S. is that with the new administration coming in, there could be a lot of clarity in the regulation, so we kind of know what to adhere to a little bit better. Crypto is allowed. The exchanges are going to have felt some heat in the last 6 months. Are going to feel a lot more. So I think in the U.S. we're kind of more in a transition zone. So I think ask in 6 months and I'll have a much better answer for you. But the regulation is clear enough to operate. But if we had a little bit more clarity, we could accelerate the growth.
Thank you. Would you chime in, Brandon, from a South African perspective? How does that look like?
I think we've got a long way to go. And unfortunately, it's a very complicated subject. I mean, there's so much more to this than just blockchain. Blockchain is a great technology, but what has given rise to so many different things. It's not just a matter of saying, all right, this regulation will fit into this department, for instance, at a government department. It crosses the company's office, it goes into the Reserve Bank, it goes into the Prudential Authority, it goes into the Financial Sector Conduct Authority, where I'm at, is with the Financial Intelligence Center that deals with anti-money laundering. It involves so many different places, not to forget our favorite organization of revenue services. So to try and say regulation will be sorted by X date is almost impossible, because there's so many elements. I mean, you get stable coins and you get different types of coins, and you get Bitcoin, which everybody confuses is the crypto world. But there's a lot of different elements. So we've only started from one small aspect of it to regulate the players that are going to provide the services and advice, and the holders of the wallets, etc. That's where we started at the moment.
Just a follow-up before I let you go on that. Yesterday, I think as late as yesterday, the authority issued a cautionary statement, and also that was a reinforcement of another one that you had issued some time back last year. What was the impetus for these cautionary statements?
I think since COVID, the world has gone a bit mad when it comes to scams. And people mustn't get confused. People throw it at me all the time, and I'm the first to understand that scams are perpetrated using fiat money every day, and they've been doing for hundreds of years. But with crypto being such a wonderful payment mechanism, right? It's so much easier to get your money to disappear and move around. So crypto is being used for two things. One, ease, and the ease with which payments can be made, and the more difficulty to trace a wallet, which is not always very clear as to who owns a wallet, and it's difficult to do that. You'll acknowledge that. And secondly, because you've got these wonderful gains advertised on the growth of Bitcoin and Ethereum, for instance, that people believe the opportunities to earn these high returns. So people are falling. Every single day we're getting messages from people saying, I was taken for a ride, I know I was taken for a ride, I know I was stupid. And all we can try and do is to educate the public more and more. Just, be careful when you give your money away. And crypto assets, or cryptocurrencies, as most of you guys will call it, it's your money. So don't just give it to anybody.
Yes, not just to give it to anyone. IVARS, what does the European space look like in terms of regulation?
Well, Europe, I think, is making a lot of progress in this sense. First, there was a lot of chaotic action, I think, following the FATF first recommendation to introduce some form of regulation or registration framework. And then all the 28 member states started to come up with something of their own. which was a complete mess, I think, and it just was like so impossible to navigate across Europe and to understand who and where and how you should register, or should you register at all if you're operating any sort of crypto business. But now I think we're approaching a phase where some clarity is on the horizon. So we've got the MiCA, the Markets and Crypto Assets Regulation, approaching around 2023 or 2024, depends on how quickly they are able to finalize the regulatory text. And I think that should bring a lot of harmonization across Europe. Obviously, this, first of all, will introduce a passportable framework, which everyone in Europe is looking forward to. You won't have to go around each member state and, receive authorization. Just get one license and, request a passport, and then you can freely offer your services. And secondly, I think it's a very far-reaching regulation in the sense of like trying to cover a lot of aspects of the crypto space. It focuses on different types of activities, including some of more kind of a traditional type of activities known as like brokerages, etc. So it might even open up additional opportunities for companies that are providing crypto services, because then they would be able to provide it in a more regulated space. And then it focuses on ICOs, on stable coins, and a lot of other things. So I think we are close to getting kind of more clarity and to getting a more structured approach to regulation. It's still a lot of work needs to be done, but we're getting there.
Someone once quipped that we are trying to use a bit of 21st technology. We are trying to employ 20th century regulations. Mark, just to wind up on that question, what is your take on the regulation stance in terms of crypto assets or digital assets?
Yeah, thank you. So, look, I think I share similar views to everybody, right? There's this multiple speed happening across different geographies. Europe is leading the way with its digital finance package. It's got MiCA, it's got the pilot regime, which calls for a sandbox. It's got DORA that looks at the large technology platforms. But it's also looking at, to touch back to Brandon's point, Europe is looking at topics that are important to crypto assets, but not at the core of crypto assets. So there's a piece of regulation and legislation underway at the moment that treats privacy, that treats smart contracts, and that treats EID, all of which are important components when we talk about building an approach to crypto assets. You might guess by the accent that I come from the UK. I'm a French guy living in the UK, so I excuse myself to my European colleagues in that way. But the UK is also quite forward-looking. It's got its joint crypto assets task force that's been in place since 2018. And some would argue that whilst Europe is taking quite a far-reaching approach towards the regulation across 30 countries, and this harmonized approach, or as we like to call it, the legal certainty, the UK is being a bit more progressive, because the UK, has already established what is in, what is out of regulation. It's talking about stable coins being, actually quite useful, and trying to find a way of bringing them in, but without regulating in such a constrictive way. So it's fascinating to watch from INATBA's perspective at the moment, given we do so much policy engagement work, just to see what the battle to gain supremacy or competitive advantages amongst regulators at the moment. And we're almost back to, the heady days where people were taking planes from one jurisdiction to the other to try and quickly spin up as, supportive regulations were being enacted.
Oh, thank you. Thank you so much. Just to go back to you, David, I think sometime back last year, we had the issue of Ripple. And that had a bit of effect in terms of, XRP and it being the company that stands on XRP. And just to give an understanding to an audience that may not know about the Ripple case, would you kindly elucidate a bit on that, and as well just tell us what is the implications of this particular case in terms of other cryptocurrencies?
Yeah, so in just before Christmas, December 22nd, the Securities and Exchange Commission of the United States announced that it was filing a lawsuit against Ripple and two of its executives, the founder and the CEO, who are also significant security holders. And the point of the lawsuit was alleging that they had raised over 1.3 billion US dollars to an unregistered ongoing digital asset security offering. So this was a pretty substantial claim. And basically what the SEC is saying is that, they're arguing that XRP is a security and not a commodity or other type of asset because it was generated, distributed, and sold by Ripple Labs. So in the US, this goes back to, we have something called the Howley test. 1946, 1947, there was a citrus farmer or a land called, was it J.C. Howley in Florida? And the Supreme Court weighed in terms of, is this an investment contract or not? And this ultimately is going to decide it. But I think, though, that, when this hit, it was a pretty slap over the face of the industry. But I think since then, there's been a lot of more commentary coming out that, look, Bitcoin, Ethereum, are not securities. They're, decentralized. They're not like issued by central body in the way that like Ripple did it for XRP. I think also this issue is going to be taken up by the new SEC chairman. It's likely going to be Gary Gensler, who's he's actually a professor at MIT on financial technology. So he's very ingrained in this type of issue. So I'm actually cautiously optimistic that the ramifications for the industry won't be as severe as we initially felt. But you could go the other way, that if you're applying everything to the Howley test, it's, well, how would this work? And so I think there's a lot of gray. I think there's this is going to be a very expensive lawsuit. And Ripple said that they're going to fight like hell because their livelihood, is on the table. So I think it's absolutely fascinating, and the ramification of the industry could be huge. But I think cooler minds in the end will probably prevail, and they'll probably pay maybe some sort of fine and work out an agreement over this issue.
All right, Mark, just to go back to you, the fact that this is affecting Ripple from the American jurisdiction, and we know that digital assets are global assets. So how does that look like if you're not talking about the American jurisdiction? What do you think is the effect as well to other cryptocurrencies?
That's a great question. Clearly what happens is it makes everybody cautious. Our industry is global, and most of the actors are, at least the actors that I work with and I've come across, I've been in this industry for 7 years now. Most of them are quite honest folk who are trying to push the boundaries, innovate, and are doing things for the right reasons. So we want to comply with the rules. And I think the knock-on effect of watching what's going on at the moment has been one of, cautious waiting and not wanting to get drawn into the conversation, to be honest with you. I'm not sure if any of you are film fans, and if you are, you'll appreciate the analogy of Star Wars, if you remember that, with the Death Star only having one gun, but if it's pointed at you, my goodness me, that's warm. And, I think to a certain extent the industry feels a bit like that, which is, you don't want to get in the hairlines of that one gun unnecessarily. So we're talking about regulation. And I think there's still there's still a need for certainty, for very clear rules, even though at the top we all gave some opinions about what's happening in different geographies. These are works in progress. They're not really very clear guidelines. And in the industry, I would argue, when you see cases such as the one we're talking about emerge, particularly in one geography, the tendency is just to duck down, below the wall and think, wow, let's make sure that we're not captured there and make sure we're doing everything with the best intent that we can. I know you're probably looking for something a bit more salacious than that, Muthoni, but I'm trying delicately to choose my words.
I think Brandon will assist you on that a bit.
Well, I think the whole question, the industry, half the industry wants to be regulated, and another half of the industry doesn't want to be regulated. So regulation gives you a form of legitimacy. But because of the complexity of the crypto asset world, no regulator is jumping up and down wanting to get involved in this regulation space because of the so many unintended consequences that could result from it. So I don't think you're going to see any country racing forward to legitimize the industry because of the risks of getting it wrong. And from our side, we are specifically, I mean, whilst we want to encourage the growth of a financial sector, and I consider this to be part of the financial sector very, very clearly, because if you look through the presentations, how many had returns on investment and very complicated terminology used by stockbrokers. You know, there's no doubt that this is a very financial game. Whilst we want to develop this sector, our primary responsibility is always to look after the consumer. So as a regulator, you got to sometimes take aim on somebody to also help establish the law, the boundaries of the law. You know, every country has different bases. So the Americans, as Dave pointed out, has this investment contract. The Canadians have something very similar, which is very wide and very nice, which we don't have in South Africa. But we have a very good constitution. And that constitution, as much as we want to be conservative and protect the public, allows the man in the street to, if you want to go and blast your money on a horse or on a crypto asset or on some share that somebody's told you is a good tip, you have the right to do it. We must just try and put in the minimum amount of regulation to allow you not to be exploited. And that's our primary focus, definitely in South Africa. And I think the other Twin Peak type models, the UK, Australia, and countries like that will have a very similar approach. The consumer is probably the most important, and then legitimizing the industry for the players in the industry will become a close second, to give certainty to them. That's secondary to the man in the street.
IVARS, what I hear from Brandon is a lot of emphasis on consumer protection. Consumer protection is how the regulation is brought to forth. What would be your comment in terms of the clampdown that the regulators are undertaking for crypto exchanges that do not comply with, AML and KYC procedures?
Well, I can definitely resonate with what Brandon was saying, that consumer protection is basically the key one of the key objectives of any regulator, to ensure that retail investors are not exposed to any fraudulent or scammy or shady companies, and are not solicited to make questionable investments. So, coming back to the question of clampdowns on exchanges which do not have a proper KYC, and I think it's not just about KYC, it's a bit of a broader topic, just overall looking at institutions and entities that are not fully compliant with the regulations and obligations of the law, because KYC is just a part of it, right? So it relates to AML regulation, and AML regulation is quite clear that due diligence is a cornerstone of any due diligence process. That collecting proper KYC documents is crucially important. That you have to have your monitoring in place to ensure that you are able to identify suspicious activity. So I think it's a reasonable and a proper and a necessary move to force entities to comply with these regulations. I think that's been quite a while that entities operated. When we had this kind of mix of entities, right? We had companies that were pro-regulation and companies that were operating in that gray zone and gray area, not necessarily complying with the regulations. From our own kind of experience, we still hold a payment institution license in Luxembourg, which puts us in a slightly different category compared to a lot of crypto businesses across Europe, which are purely registered for AML. And I can speak from my own experience that it's a huge difference being subject to AML regulation and obligations and being subject to a complete full-scale traditional type of license, because you have way more prudential obligations and requirements that you have to comply with compared to just KYC obligations and some additional AML obligations that come with the supervisor regime. So I think it is necessary to first of all create kind of an even playing field. And ultimately, it again complements the objectives of regulators to protect investors, because if institutions and entities, exchanges, or other service providers in the crypto space, if they have to comply with similar obligations, then it also implies certain protection for consumers.
I think our moderator's offline for now.
I guess.
So we want to the question while we're waiting.
I think I could just jump in there in terms of like what we're seeing are the regulators clamping down in the U.S. So that's actually been a hot topic. Like, are the regulators coming down in the U.S.? And the background for it is because in the last 6 months, we've seen BitPay fined, BitGo fined, Bitfinex and Tether fined. We've seen charges against BitMEX, Probe of Binance. We've seen SEC charged. And kind of when we take a look at the history of the crypto industry, we've never seen anything like this. But what I would say is this is just the start. So enforcement actions overall for the industry, like if you take the Financial Crimes Enforcement Network, which is the financial intelligence unit of America, they actually issued 62% less fines during the Trump administration than in the previous President Obama-Biden administration. So, I think that this is going to be a lot more of an expectation. And I wouldn't say that the regulators are necessarily unfairly clamping down on the crypto industry, because if you take a look at the actual settlements or the charges, I mean, it's fairly reasonable in terms of what the government cited individual exchanges for. But I think there's definitely an expectation for greater maturity, and when that maturity is not met, subsequent enforcement actions will come.
IVARS, apologies, I had a technical hitch. IVARS?
No, that's fine. Yeah, we kind of took the floor to ourselves and continue the discussions on the topic.
All right. We want to get to an understanding that there was a regulation that was put up by the Financial Action Task Force, and they imposed what we call a travel rule. And this, of course, affected the crypto space. Brandon, what would be your comments on the same?
That's to do with your client.
Can you hear me?
Yeah, I'm just checking the question, but it's very important for the legitimacy of the industry is that that we understand who are the players. The big things often thrown at some of the crypto assets is used by the illegal elements of society. And I believe that whilst there might still be a large percentage of value sitting in that sector, most transactions right now, or the numbers of users, are probably legitimate man in the street, and that's probably what's driving the price of these assets up so much. So it is important that the FATF type of regulations are enforced so that regulators, tax authorities, and other government officials can at least know that when transactions go across the web using blockchain type of or based technologies, we know who are the players. So I'm a supporter of that.
Of the travel rule.
Also.
Mark, would you kindly chime in from a UK perspective?
Yeah, let me just give an example, I think, of the FATF travel rule and how some of our members have organized themselves to try and best ensure compliance with that. They've been working around messaging standards and the virtual asset service providers between themselves have got together and created the INTERVAS messaging standard, which allows them to start, sending messages between themselves and coordinating so that they can exchange information and, as best possible, get to the point where they are operationally preparing for this maturing of their business, this ability to comply with standards being set or regulations that are being delivered to them. And I think that's a good indication of the reaction of the industry. Somebody mentioned it earlier, I think, MUTHONI, whilst you just popped away for a second there, that this is a natural phase of maturing business. Right? David, I think it might have been you actually suggesting that, as the industry is maturing, we have to accept that on occasion, as industry players, we might inadvertently breach regulations, or we might be in breach of regulations, and therefore we have to accept the penalties that go with that, as do any other businesses that are operating in any regulated market. So, back to a point that Brandon mentioned, I don't think that the introduction of FATF's travel rules or standards or advisories or any other regulations is necessarily detrimental to the market. I just think there's a natural period where, as IVARS said, there's quite a bit to get used to for a young industry. And as well as structuring your business so that you can function at this leading edge and working it out as we go along, which we are all doing because we're innovating, we have to, back to your point earlier, MUTHONI, we almost have to keep an eye in the rear view mirror because we're needing to comply with regulations that was oftentimes architectured and delivered to market some 30, 40, 50 years ago. And, apart from me, maybe, none of us were around then. So we're having to learn historical structures. We're having to try and innovate going forwards and keep our businesses well staffed with skills and knowledge so that we're in a position to be able to comply and to work with each other. And I think, that example that I'd like to leave you with there of the INTERVAS messaging standard is a good example of how the industry is responding to try and comply with these different standards and suggestions that are coming out.
David, just to borrow from what Mark has said, I think you are overly positive about Gary Gensler administration coming, him being at the head of the SSC. And I recall I think the proposed regulation from FinCEN last year was to have, I think virtual asset service providers also provide details of their customers' engagement with third parties. Was that an overreach? Is that breaching the constitutional right to a bit of privacy? What would be your take on that?
Yeah. So I think the travel rule is definitely a complex issue, and interested also to hear IVARS' opinion from mainland Europe. But just solely from a U.S. perspective, in 1996 is when we first had the travel rule, and that applied mainly to banks. 2013, crypto exchanges were then subject to our domestic anti-money laundering law, the Bank Secrecy Act. And then May of 2019 is when the Financial Crimes Enforcement Network, FinCEN, told us that the travel rule definitely applies to the industry. It's extremely burdensome to be able to pass this information. Like, we don't have a mechanism to send it at the time of transmission. You do also raise, some privacy issues in terms of the anonymous nature and, keeping that intact as well. What I think is a little bit unique about the US is that we've had 30 VASP come together as part of the US Travel Working Group, the US TRWG. We couldn't think of a more creative name. And we're trying to make an industry-led solution. So this is a complex problem that no one can solve on their own. The system, the technology just wasn't designed to pass this type of information. So it's our hope by, working more proactively with the regulators or to start the domestic ones in the US, although we're engaging entities around the world on this type of solution, in order to handle this type of issue. So I think your question was a little bit about privacy. Yeah, and it is problematic. But if this is something that we're going to have to comply with, we're trying to be creative and make an industry-led solution, and everything from the governance, the tech, the security, the engineering, it's all paid for by the industry, in hopes and be able to comply with this rule.
All right, thank you. Brandon, if I may come to you, what do you think are the challenges or the focus, and what are the focus areas of regulated entities?
Of regulated entities going forward?
Yes. What are the challenges that they are being faced, and what is the focus areas?
Well, I think the focus area is going to be to get the confidence of the governments of the world, and then secondary, to get the confidence of the investing public. But if you look at how many people are getting involved every day into crypto assets, I think they're already sold. So the important thing now for the industry will be to help, and it goes to one of the questions, the second question to an extent, how does industry work with regulators? Is that the industry is going to have to get the bad apples out of the game. There's an old saying that I've adapted to that not everybody in the diamond business is a crook, but every crook is in the diamond business. And I think that is not everybody in the crypto asset space is a crook, but every single crook is in the space. So a big focus for the industry must be to help get the crooks out of it, and to put in the rules and regulations so that when you are dealing with the public with already a very, we're not talking about stable tokens and stuff like that. I mean, just take Bitcoin, for instance. I mean, it's already a risky, very risky type of product. So you don't want to have all these other factors, the criminals involved, running freely. So it's going to be very important that, for instance, that when we find these activities, that all the legitimate players in the industry will work with us to, for instance, try and freeze these transactions and make sure that the crooks in the industry don't benefit financially in the long run from their actions. So I think that must be a very important focus area, to work closely with their different governments to make sure that people, the crooks are out, and that the players in it aren't bypassing the revenue authorities, the tax authorities as such, and other rules because of this gap. As mentioned before, many rules are written sometimes hundreds of years ago, and they've got to be applied to a modern world. And parliamentary processes in most countries doesn't happen overnight. We're talking years, 2-3 years sometimes. Yes.
So what I hear you, Brandon, say that we need, not everybody is a crook in the business, but they are crooks in the business. So IVARS, just to come back to you, I think there was a survey that was done about the nefarious activities that happen with digital assets. And I think the highest percentage was not on the negative, it was actually on the positive, that digital assets are not actually used for most nefarious activities. Because we can also replicate the same if we were using, assuming it's cryptocurrency, fiat currency would also be the same. That has been used for many other activities that are not legal. What would be your take again? What would be the challenges that we could highlight? And what are the focus areas again for regulated entities?
Sure, that's an excellent remark about the report and about cryptos being used or not used by criminals. So just to put this in perspective, like the comparison I like to make is that by the United Nations estimates and the report on money laundering, approximately from, I think it's around $2 trillion is laundered annually, and we're speaking about like cash and fiat, and only just over $1 billion is laundered through cryptocurrencies. That might have a bit increased now with the increasing value of Bitcoin, but the figures are still uncomparable to each other. So obviously there are multiple reasons why that is the case, because I think it's still easier to stay anonymous with fiat than it is actually to stay in crypto. While there are some coins that facilitate this anonymity, like Monero or Zcash, for example. They're kind of their core is to actually kind of obfuscate and anonymize transactions. But the volumes on these cryptocurrencies is insignificant compared to other major cryptocurrencies like Bitcoin, for example. So, and the technical complexity, I think, is still a kind of a barrier for entry for criminals. While I think the adoption is widespreading and we see more and more like complex use of cryptocurrencies to launder the coins, to hide the initial sources, etc. And there are obviously like other services that facilitate that. But for now, I think we're far from a situation where criminals would actively seek out cryptocurrencies to carry out their kind of money laundering activities through crypto. Simply because it is complex, and also the tools that allow for investigations are also advancing and allowing exchanges and companies to detect illicit activity more actively and more accurately. And talking about challenges, actually, like detecting and fighting and combating fraud and money laundering is one of the challenges for regulated entities. And we all know that fraudsters are always 2 steps ahead of the industry and all the tools that are out there designed to detect their illicit activity and their criminal activity. Usually, like, fraudsters are the ones that are to exploit bugs, or deficiencies, or loopholes, or gaps, or whatever, like deficiencies of controls you might have as an entity. So finding ways of combating fraudsters is I think, a great challenge, and especially in the world of digitized services, digitized goods. We all service customers online. Meeting people face to face is becoming like thing of the past. We've got not just exchanges who do online onboarding, we've got banks who do online onboarding, and that creates a completely different avenue of risk of synthetic IDs. With the use of advancing technologies like deepfakes, I think it's becoming even more and more problematic. Tools that have been thought to be efficient and effective in identifying fake identities are now challenged as well. Like, a few years ago, liveness detection tools and biometrics probably were kind of a very strong tool to prevent entries of illicit actors into the system and receiving accounts. But I think today these tools can also be challenged because there are a lot of other technologies available now that can be used in illegitimate ways. So I think that is one of the challenges. And at the same time, now speaking as a compliance specialist, I can say that keeping a balance between compliance and businesses is also a huge challenge for regulated entities, because yes, there is a increase in risk, and you obviously can use all sorts of tools, and you can apply all sorts of measures which are going to make a terrible user experience, but you will be a very safe exchange, and you will keep like 100% of the illicit activity off your exchange, but probably you'll keep off all of your clients. So striking the balance, like, how do you keep the business appeal, and how do you make your services lucrative for customers, and at the same time keep a safe environment, keep a compliant environment, is a super challenging task right now.
David, just chime in quickly so that we can wind up on the same. And Mark, as you follow, what are the challenges that you think that are being faced by these entities?
I think that the issue is that it's not the same level playing field in terms of how we're adhering to licensing and regulatory requirements. And I think this is such an issue that when Coinbase, they're going public in their security exchange S1 commission S1 filing, they literally wrote in their filing that one of our challenges competing against other exchanges that are not upholding the same level of regulated adherence, and they even called out an industry competitor in that filing by name. And so, I think to Ivar's points, there are challenges in terms of, the business compliance, which one do you go? But I think long term, Coinbase will be in the clear, because it's the best thing to go by your customers to follow the rules, follow regulations, and gain trust. So from a short-term perspective, you can have, you may get a few more quicker customers by skipping a lot of the processes, but it's going to hurt you long-term. And I think what Brandon brought up previously, kind of about the fraud in the industry, I'm not disputing it exists, but I think there's a different level of how different exchanges are handling it, and how some are being maybe a bit more proactive than others.
Okay. Mark? Mark?
Yeah, thanks, Mithuni. Sorry, I was just trying to unmute. Look, I was just reflecting, and I've got to say kudos to IVARS and to David, because your business is super successful. You've got massive reach, and you've got that balance right between compliance and innovation and user experience. But how a business continues to do that when we're needing to comply with regulations that take sometimes 1, 2, 3 years to create, that are architectured on concepts that are decades old, when we're in a competitive space where 1 year ago, we didn't even know about stable coins, most of us. So if you take that situation, the competitive risk that you're exposed to, were a large state to airdrop a bunch of tokens into a wallet across, say a couple of billion people, how do you compete with that as a business that wants to comply with regulation? And I think that's the challenge. So what I would advocate is that the regulators continue to educate themselves about the technology. We as the industry continue to help educate the regulators about what we're doing, but learn about the complexities that they face as well, because market stability and consumer protection is uber important. If we don't have stability, we can't operate. If we don't protect consumers, we've got no one to serve. But I think that education piece has to be more efficient. And I'm a firm believer personally, and this is not INATBA's position, but personally, I think there's an opportunity to leverage the technology to rethink regulation and to put regulation potentially right at the center of some of these algorithms and business processes. So for the first time ever, regulation could be sometimes ahead of the event, instead of trying to scramble afterwards to identify what happened and then locate the legal entity that it needs to try and chase down. Sorry, MUTHONI, you asked me to be brief, but I feel quite passionate.
I believe I cannot be able to regulate you. You're like the digital assets. I'm trying to find the balance. Just to wind it up, I think we're running out of time. I want to start with David. I'm sorry I put a bit on the pedals too a lot. What would be the compliance when we comply with all these regulations? Would this give us a key differentiator factor? And the reason I came to you is because let's put Tether just a bit on the magnifying glass now that it's somewhere where it can be regulated. Is there a differentiator with competitors? Does it give it an upper edge? What would be your comment on the same?
Yeah, I mean, I think you can onboard customers quickly. If you got rid of the regulations, you can do it very quickly. You wouldn't be following the rules. So I think it is a competitive edge long term. When you follow the rules, you're not going to get fined. Customers will trust you. And so it's a long-term game.
Brandon, we can wind it up. I see John is here.
I think I've said this a few times already. Just work with the regulators so that you can try and exist in the future. Because the alternative, most regulators would take the easy route, just ban it. So if you don't want it to be banned, find a solution. Bear in mind that most regulators are boring accountants and economists and lawyers. They don't understand what you're speaking about. I mean, until this week, I thought DeFi was a brand of fridge.
Brandon, thank you very much on that closing note. While I do agree with you, Brandon, I don't believe that it is always going to be the case, because innovation is always so far ahead of the regulator. In fact, what I would actually say is that innovative companies or entrepreneurs should always be able to, as they innovate on new products and new solutions or new tech or whatever, they should always actually uplift the regulators to say, you know what, hey, listen, this is what we're trying to do. This is how we want to solve the world. And we need you to come and join us so we can understand what do you think we can competitively do right in this specific case, and how we can help you establish policies and laws that will certainly help us to remain sustainable and alive, so that you guys don't shut us down as we try to innovate. On that note, thank you very much. Merci beaucoup, Marc. Je parle français aussi, so thank you very much, guys. And I look forward to a very engaging conversation in the future.